And while we have seen significant demand and it's an industry that's growing like crazy, I will say that there are some nuances, like we'll talk about later in the presentation, that do make it, do provide additional challenges that we typically don't see in other industries. The biggest being the tax situation as it relates to Section 280E. Makes it a little more challenging to make an after-tax profit than what you would see in more traditional industries. And then the third biggest myth that I see around the space is that cannabis is just like any other retail consumer packaged goods. And really, it's not. And while we might see some similar margins that you would expect for another CPG company, really what's different is the amount of compliance and the complexity of adhering to all the rules and regulations that really sets cannabis apart from other industries and really requires anybody that's operating in the space to make sure that they have a sophisticated advisors and professionals that are helping them get their business set up and operating compliantly. So as far as cannabis banking goes, we'll talk a little bit more in depth about that. And like I mentioned earlier, in mature markets and where licenses are being given out, we're seeing that banking is possible and that most of the banking that you're going to have access to is going to be a program that's offered by these smaller banks and credit unions. And typically, you're going to see increased fees, increased compliance, and that's because it goes back to that federal illegality and that these banks and credit unions that are supplying the cannabis specific accounts have to come up with an entire compliance program so that they in turn are not being harassed by federal regulators and can house your money in a good way. So generally, you're going to be dealing with some amount of limited services. It might require increased diligence when it comes to accomplishing just your normal business needs, like sending out a wire or making an ACH payment. But yeah, I've provided on the right here an example of the documentation request list that we receive on a monthly basis just to keep our accounts in good standing. And so as you can see, there's a number of requirements that are requested by the bank. And as an operator, I think the biggest thing is just to make sure that you're aware that this stuff is going to pop up and be there, and that you have the staff support that can handle this sort of compliance demand. And if you're just getting started and looking for a banking solution right out the gate, my best advice is to research the programs that are available to you in the state, and then be upfront with any banks that you talk to about what your operations are. The last thing you want to do is partner and get an bank account set up with a bank that is unaware of your operations. You get things like payroll and vendor payments hooked up to that account, and then all of a sudden your bank drops you, and you have to figure out a new account at the drop of a hat. That's definitely something to be avoided. So it pays in the long run to be upfront with what your operations are with a lot of these service providers to avoid increased costs and complexity down the road. And finding banking relationships is definitely something that me and my team have assisted our franchisees with, and that's a pretty regular part of one of the first steps that we cross when helping franchisees get up and running. Once you've got a banking relationship established, some of the other hurdles as far as entity setup that you're going to have to consider and bridges you'll have to cross are choosing the appropriate entity type. Most of the time in this space, we're seeing a lot of limited liability companies and C Corps for various reasons. And really, this is going to come down to the overall intent of the business owners and what they're planning to do with the business. With each type of entity structure, I'll say that there's advantages and disadvantages when it comes to the taxation of them and ultimately the liability. With LLCs, you get the benefit of single taxation and limited liability, of course, but at the same time, with the frequency that we're seeing financial and tax audits, if you happen to be selected for an audit, sometimes those audits can leach into personal taxes as well as the other members of the LLC, and then any businesses that also might be tied to that LLC. So the audits have a potential for spreading a lot easier when the structure is a limited liability company. Whereas if you structure as a C Corp, you're also getting that limited liability, but you're subject to the double taxation issue that is so common with C Corps. And then as far as when it comes to audits, we're seeing a lot of C Corps just for the simple fact that if your company was audited, usually those audits stick with the actual C Corp entity and they don't spread down to any subordinate or superior entities or parent companies and personal taxes. So that's another advantage of that structure. Obviously, you'll have to work with your accounting and finance team to get things like your federal EIN number, as well as your state and local tax accounts set up. And then really what it comes down to is trying to establish the processes and procedures at the front end that will help your business be successful. Things like setting up a cannabis specific chart of accounts and then establishing cash cycle procedures, just because even though you might have banking, like I said, you still are dealing with a lot of cash at the retail level. And so having those processes in place to make sure that you know where your money's at and you're not losing it at any step in the process. And so these are all things that we deal with pretty regularly and can help advise on and get what we work with our franchisees to make sure that they have these tools set up to operate efficiently.